The fears that everybody expresses are tariffs, it's the end of the global system, everything's going to break, it's recession, it's inflation. Crypto, here's Bitcoin, 3 month on 3 month, just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. This is not a recession. This is what happened last time Trump got elected in 2017. Exactly the same reaction by financial markets and exactly the same outcome. The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound on the back end, like in a couple of months.
As investors wait in expectation for crypto prices to rally, we saw Trump double down on his position to make the US the crypto capital of the world. Now we'll hear the latest prediction from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. With the keen eye of a seasoned investor, Powell casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just under $83,000, up almost 5% in the past week. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
The crypto prices, it's so terrible. Trump's not going to save me. BlackRock aren't going to save me. Don't be ridiculous. The dollar is the most important input to all of global growth. I have been saying for a long time now, is the strength of the dollar, this is the dollar inverted in pink, the strength of the dollar after Trump got elected leads by 2 months the economy and financial conditions. As Trump was clearly going to start winning, the dollar started rallying, tariffs, whatever it was, and they started rallying the dollar, which is what happened in 2017. And what happens is it slows down global growth. And so the US Economic Surprises Index, the SESI, has been falling in line with this. Twitter, meanwhile, loses its collective and says, we're going into recession, it's terrible. Scott Bessent told us to. A, Scott was a Global Macro Investor subscriber for a long time. And B, it's not a recession. It is a weak patch in data driven by financial conditions that tightened last quarter. If you look at it going forwards, on a forwards basis, it's been easing fast. So we will see the economy weak this quarter, and then it will start to strengthen from a weaker base. This is not a recession. Don't be ridiculous. This is what happened last time Trump got elected in 2017. Exactly the same reaction by financial markets and exactly the same outcome. Economic data weakened, the DXY had strengthened, then it began to weaken, and economic data followed it, and we got a big boom. And we will see very similar. The dollar drives things like the ISM survey, or this is the services PMI. Services PMI was weak. Everyone's like, we're going into recession. The services PMI is weak. Really, all it's doing is following the dollar. And the dollar is leading and says it will bounce. So it will bounce. And then crypto. Here's Bitcoin, 3 month on 3 month. Just reflects these financial conditions and the economic surprises. So the economy is weaker, financial conditions were strong in the past, and Bitcoin has already priced in the entire thing. So the damage has been done. Okay, what's the good news in all of this? The good news is the financial conditions index, which is the dollar, rates, and oil, is rebounding like crazy. Strong conditions lay ahead. The economic surprises index is not finished going down yet. It will go down a bit further. Maybe they'll be able to sneak in a couple of cuts. If we see the trueflation index, inflation has been falling off a cliff. I think the Fed get cover to cut, which is what they want because they need to roll the debt. The everything code, if you haven't seen it, A, ask the Raoul bot about it. B, watch the videos on it. They need to get rates down so they can roll the debt at roughly around trend rate of GDP growth. So they need to get interest rates down to 3% or lower. Guess what? The Fed today, where do they think interest rates will be? 3%. Where do they think economic growth will be? Around 3%. I've been saying this forever. This is the entire game. That's what they're trying to do. Economic surprises should be weaker. Then we're going to rebound on the back end. The next part of the year is going to be very strong. 2017, those of you remember, was an amazing year. And I think we'll see something very similar. Bitcoin priced in those financial conditions, which were leading by 3 months. Bitcoin's already priced it all in. So it's the worst news is in. My guess, probably up only. The chart you all care about that we came up with, Global M2, 10-week lead versus Bitcoin. It's worked perfectly. I didn't expect it to be work as perfectly, but it is. But basically, we're turning the corner and we should start to see higher prices. And the higher prices will come quick, and the higher prices should take us all the way back to the highs pretty soon. Not soon like in a week or two, but soon like in a couple of months.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
So I think what you've all had to go through is a boring sideways consolidation pattern with a slight down bias. Your alts have been nuked, but nothing out of the ordinary. We saw this in 2017. We've seen it now, and we are very, very close to the turnaround. So patience is all I keep asking for. Stop being so dramatic. It's funny. It's actually boring. It's like you do not get 150% returns a year from an asset without drawdowns. You will have to get used to this. You have to stop worrying at this point in the cycle. We peaked in the cycle earlier in 2021, and we peaked because the business cycle had peaked. This time, the ISM is still low. And so we barely started the cycle. So I know we all say it's so early, nothing's really happened yet. It hasn't. We had phase one of the banana zone, which was the breakout of that consolidation range. This is the consolidation phase two. Then we'll get into the much more important banana zone phase two. It is all coming. Bitcoin in the business cycle. This is what has helped me through my entire time I've invested in Bitcoin, is this log chart. I showed it all the way through in 2020, all the way through. It works beautifully. We are currently kind of like this 15, 16, 17 cycle. We're still kind of a little bit subdued, but in a beautiful uptrend. Bitcoin's done what, 600% from its low. And then what we will get is as we hook into the next phase of the banana zone, we will start hooking higher into this. Now, I know many of you say it's diminishing returns. It won't do this, just higher. We'll figure out the rest later. But right now, higher. ISM, the business cycle. The business cycle drives crypto. The business cycle implies Bitcoin implied pricing is low versus where the ISM is right now. But when we start looking at this is going to get interesting for you. These are not projections. You morons who want to come troll me on X and saying, you told me this and I demand my money back. I'm not interested in you. I'm trying to give you contextualization. If we get to the 1 standard deviation level by the end of 2025, we're about 210,000. If we get to 2 standard deviations, it's 400, and it's about 800,000 if we get to 2 standard deviations. Now, we've hit 2 standard deviations every other time. Will we hit it this time around? I doubt it, but it's possible, right? What's the probabilities? I don't know. The probability of 210,000, I would say, is like 70%. 412,000 is like 40, 35%. 800,000, I don't know, 20%, 15%. But that's kind of the rough idea. And again, these are not predictions, they're contextualization. But when we look at the ISM pricing, ISM we know is bottoming. It is just coming up from 50. And if you see the ISM in black here, it's cyclical. That's why it's called the business cycle. And it tends to get to somewhere between 55 and 60 something.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.